Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering X dividends for next week, April 16th through the 20th. So we go over using two websites, dividend.com and YCharts, in order to screen about 30 to 40 stocks normally, very quickly, in about 10 minutes or less. We're able to take about 40 stocks, screen them down for price to earnings under 25, yields greater than 2, increasing revenue, net income, free cash flow. And then we can also take a little bit deeper dive and look if they are trading right now with a yield over the price or price over the yield. We can get some really nice estimates in order to give us a sort of outlook on stocks we may never have crossed, because these aren't ones that are normally talked about on the media and such. So unless you're specifically looking for these stocks, you wouldn't have found them. So that's what we do today. So let's go ahead and start off at dividend.com. Now have made a video on this website in the past talking about how dividends work, payout ratio, the earnings, the dividend payouts, and the ex-dividend date, how the money is removed from the stock price on the ex-dividend date. I used AT&T as an example. If you guys would like to watch that video on how the dividend is removed from the stock price, then go ahead and check out the video in the top right corner, and that goes into all of that information. But we're going to be checking out X dividends coming up next week. So on dividend.com, we want to go to X dividend dates. And then from here, there's normally some search results here that you can adjust. If you have another browser, sometimes you can, if you've used too many searches, you can use another browser. I believe that kind of clears it up. So I'm going to go ahead and flip over here. And these are all the stocks coming up next week. Here are the dates. So this is the 16th, which is next Monday, and then they're scattered in between. There's a few 17, 18, 19, and 20s here. So it's all from Monday until the 20th, which is Friday. So there's no additional pages here, meaning that all the stocks here that we see are all the stocks that are coming up on X dividend next week. So number one right now at the highest rated is Oracle. Actually, no, is RPM with a 4.6. In the last couple of weeks, we have had some 5.0s, but nothing really spikes out with the 5.0 rating. Looks like the lowest is the 1.6 here, the CMRE, with a 1.8. Now, what is the DARS rating system? Well, here is the DARS rating system. It's the Dividend Advantage Rating System. It basically measured it if the stock has been trading near its 52-week high, if it has a nice yield attractiveness. It doesn't want anything over 10% because these could be considered extremely risky, whereas it doesn't like a lower yield of around 1% or less because these are not really beneficial to long-term investors. You want to have a nice dividend payout, sort of like rent. You want to have a nice return on your investment. Dividend reliability. How healthy is the payout ratio? I like to look for a payout ratio of 60% or less. Some investors like to go 50% or less. Even so, that means that even during downturns, if their earnings get cut, close to half, they still have room in order to grow their business and pay out dividends for the future. They won't slash their dividends such as General Electric has done recently. Also, it measures dividend uptrend. How is that stock looking to increase over the next few months, and is it trending upwards? Is that stock going to be increasing their dividend payout year after year after year? Is the market expecting that stock's dividend to increase? So yeah, there's lots of stocks out there that have increased their dividends throughout multiple recessions. A couple of examples are Johnson & Johnson and Procter & Gamble that have been paying out dividends for more than 30 years. Earnings growth, essentially, basically, it evaluates the company's expected earnings per share for the company's financial year, and then based on that estimate, are they going to increase their dividend by 5%, 10%? AbbVie, for example, they recently increased their dividend by, I believe, 30%. I believe it's on the cover here. AbbVie increases their dividend yield by 35%. So AbbVie is a break off of Abbott. Abbott company, which has been paying dividends for some 40 years. So Abbey themselves is back from 2013, I believe. So they're pretty fresh, about 5 years. But if you buy and hold them for the long term, I believe they're a great buy and hold stock. So let's see here. What is this? Oh, okay, recommended. Okay, so let's go ahead and get into our results here. So because we only have around 40 stocks, I'm going to go ahead and take those 40 stocks and then enter them into Y charts. So over here on Y charts, we just take their symbols, their stock symbols. So we start with Oracle at the top and we work our way down. Now you don't want to do it too fast, because if you do it too fast, like if I were to type in PFLT and then hit enter, sometimes it may not accept all the letters. But in this case, it has accepted those, so I'm just going to continue to enter them in, and hopefully, I kind of give it a few seconds there just to kind of find that stock. Otherwise, sometimes the tickers, you may choose the wrong ticker symbol there. So ZTS, Foot Locker over there. So what I like to do this for every week, I like to do this whole ex-dividend lookups, because this gives me a nice broad variety of stocks to look up that I may never have even researched in the past. What are some of the stocks that are out on the news right now? Facebook, Amazon. You know, those are stocks that are getting talked about very heavily right now because President Trump has discussed taxes and such towards Amazon, and then Facebook has been getting hit with that data leak. So those are some stocks that are out on the news. But what other stocks are out there? You know, there's other names out there, Tesla, for example, but many of these here, you would never even heard about their names. So some of the common ones that I've heard of myself are Oracle. We have Foot Locker right around in this area. Yeah, Foot Locker, WD-40, Colgate, Ford Company, CVS Health, and a lot of these other ones I've never heard of. So what this does every week, it allows me to get around 30, 40 stocks, screen them very quickly with you guys watching as well, and just kind of seeing this whole process of how I can screen 30 stocks in about 10 minutes or less and come up with a good variety of stocks that all have yields under 20, PEs under 25, yields over 2, increasing revenue, free cash flow, and net income. And then I can go and take those 4 or 5 stocks and then read over their 10Ks instead of having to go and read over 30 stocks 10Ks to see if I can figure one out. I can look up 5 stocks and read over their 10Ks, take a look at their financials a bit more. Do they have a good balance sheet and such? Are they increasing revenue year after year? You know, where has their money gone over the last quarter or years, etc. So now I have about 10 stocks here selected. Now my very first way of screening these stocks, so now I'm going to go ahead and get rid of dividend.com. Now Y charts, I have another video on how you can access this website for free. From my website, the financial-investor.com, there's a link on my website you guys can use to access this website, and it would come with all my financial metrics already on the link, and you just have to plug in your securities here and you can follow along, or you can do your own screening. So here, all we're looking for is anything that has a PE over 25. I use 25 because that's the average of the S&P 500, and then I go ahead and hit it with I remove it from my list by hitting the X. So right here, the blue one right here at the top is a 28. So now I look for blue over here, which is Comtech. It's third from the bottom. So over here on the left, I can remove it, third from the bottom. And there I'm left with a number of stocks that all have PEs under 25. And then I will get about the next 10 or so stocks and do this whole process again with Compass and Zotis. And green here, the WD-40, and the red, which is Colgate. I've actually owned Colgate in the past, and I no longer own it now, but it had a very nice return on it. Bridge Bancorp, so here at the top, has a PE of 31, and that gives us our numbers. So all of these stocks now have a price earnings ratio of under 25. So you're not overly, you're not paying too much over what their earnings are in comparison to their earnings. So next, we're looking at dividend yield. Again, we don't want anything too risky, such as a 10% yield, but at the same time, we want a nice healthy dividend yield of around 2% or higher. So I'm going to go ahead and remove any of these here that have a dividend yield of 2% or below. So Credit Corp and Graham Holdings and Faculty Brands. So there we are. We have this 8.54, which we're not really ruling out. We can take a look at it. And we'll go ahead and recheck all these other ones, and there we are. So we're going to go ahead and remove US Ecology and Pathfinder. Now, if you guys would like to screen for stocks with a dividend yield of 1% or higher, that's completely up to you guys. But for my example, if I'm invested $100 into a stock, I like to get at least $2 back in those dividends paid out per year. If I'm investing $1,000, that's $20. If I'm investing $10,000 at a 2% yield, that's $200. And if you get an average in your portfolio of around 4% on a $10,000 deposit, you're going to make around $400 of just dividends your first year. And then you'll be able to reinvest those dividends and be able to deposit more money, which will just increase and compound your return. So international, interdigital right there, and that's it. So all of these stocks here all have PEs over 25 or under 25 and dividend yields greater than 2. There we are. Everything looks nice. Now, our next step I like to use is over the last 5 years. You know, we've had very good economic growth over the last 5 years. You can also go 10 years. 10 years is a good example because we came out of the recession back in 2008. We want to make sure that this stock has had increasing revenue, increasing free cash flow, increasing net income over the past 10 years. So I go down here to data format and I want a percentage change. So how much has the stock changed over the last 10 years? So their net income is up 281%, so that's very nice. Their free cash flow is up 34%, and their revenue is up 42%. So overall, I'm going to go ahead and say that this stock is positive. Now, if there's any negatives here, such as this is negative 333%, and this is their free cash flow. Now, free cash flow is not too bad to be in the negative. That could mean that they've gone through a huge acquisition for the last few years. This would be a good example of one that you would need to go and look at what the heck did they do back in 2005 that all their free cash flow went into until recently in 2017, a little over 2017. So for the last 2 years, they may have been doing some sort of acquisition and blowing their money on that, but now they're recovering here from, bottoming out here in 2017, and they've actually spiked up. They've recovered nearly half their loss there. But it has some negative, so I'm going to go ahead and remove it and continue. So there's some positive, and Main Street Capital, all very positive. Costa Mare, we do have negative net income. I like to see positive there. Ford all has positive, and look at that free cash flow. Free cash flow is what's going to pay your dividend in some, the down markets. When their earnings aren't all there, they have to pay out of their free cash flow. That's where that dividend money is coming from. So here's negative Procter and Gamble. So go ahead and remove that. At Apache, negative 49, negative 119, and both the revenue and free cash flow. Go ahead and remove that. And CVS, all positive numbers there. So now we're left with 6 stocks, and these all have, again, PE under 25, yields over 2, increasing revenue, free cash flow, net income over the past 10 years. Now, I like to look for some bargains. Now, one way I like to look for bargains once I've narrowed it down is I will select price and dividend yield over the last year. And what I like to see is make sure you go down to your data format and select it back to original. And I like to see that the yield is over the price. This could be an indicator that the stock has came down in price pretty sharply recently, which their payout ratio divided by their current stock price gives them their dividend yield. So this stock right here is trading at a 2.55, which is near highs for the past year. You can see over the last year, this dividend yield for the stock has never been this high. if you had bought this stock back in July of 17, you would be buying at a below 2% yield. But right now you're getting an extra 0.5% for buying at this time. And then say over the last 10 years, how is this dividend yield, or how has this company paid out dividends? You can see every single year for the past 10 years, looks like they've increased their dividend very sharply. Since 2013, looks like they had a nice bump prior to going into 13, and they bumped it again in 2013. Looks like they had two bumps in 13. They bumped it again in 14, bumped it again in 15, bumped it again in 16. And look how high these bumps are going. So they're increasing and increasing and increasing their dividend payout every single year. Very nicely there. So that's nice. If you're buying a dividend stock, you want to get a great dividend yield going in, and you want to get that solid dividend payout year after year after year with increasing dividend payout. So this stock right here looks very healthy. So let's go ahead and continue looking at these stocks. Which ones have a yield over price, which could indicate that they are good bargains right now. So that's when you guys would need to dive into their 10Ks, look over their last quarterly reports, look over their financials. Why has their price dropped recently? Is it due to increasing interest rates as of February? Is it due to just market correction? Is it due to tariffs? Is this something that's affected by the tariff talk that's been going on lately? Because this could bounce back into the high, mid 50s or so. So that would be a very nice gain. Plus, you would lock in that dividend yield of 2.55% and increase in dividends over the next couple years. So again, 2.55 yield over price. Here with MSC Industrial, we have price over yield. So this one, it could be a good bargain, but right now price is over the yield. And there were times back between July and October where you could have bought this stock at a 2.5% yield, but now you're getting at a 2.14. So it may not be a bargain price. Foot Locker, yield over price. See, the yield was at a 3.0 for a while. And back in October of 2017, a little over, a little after October, November period, this stock was trading at a 4% yield. Now, if you're buying the stock, look at that nice, healthy jump. If you follow this up right here, $46.63, you would have been getting, if you had invested $100, you would have got 2 shares, paying out $8, roughly 4% per share. $4 per share. The math there, it's kind of weird. Anyways, kind of going on. All I'm looking for is a yield over price, which could mean that the stock is undervalued at this current time and could be a good buy opportunity. So price over yield right now for Main Street, Ford, price over yield, and CVS, yield over price. So again, CVS could be another potential buy. This drop right here, yeah, it looks like this stock, you can see the price right here. Over the last year, this stock was trading probably averaging right around 75 all throughout 2017. And then recently, as of February, this stock has tumbled from over 80, around $82, $83, all the way down to $63.75. Now, was it warranted? I think this was probably caused by that whole JP Morgan, Berkshire Hathaway, Chase, Amazon talk of getting into the pharmaceutical businesses and probably a couple other things. But you also want to take a deeper dive into these companies, look over their financials, their 10Ks, what kind of competition are they going into the future? Are they doing some sort of buyouts, interest rates? Again, research why the stock right now is trading at what could be considered a very nice buying opportunity, where the stock again could bounce back off these lows back into the 80s. That would be a very nice capital appreciation. Plus, you're locking in a dividend yield of 3%, which is not heard of for CVS. The last time you would have been able to get a 3.14% yield it's never been this high. So there's the dividend yields over the last 10 years. And this is at its highest it's ever been in the last 10 years. And if we bring in our dividend in here, it has a very nice, healthy dividend that's been paying an increase in dividends year after year after year after year and bumping their dividends very nicely, now paying 50 cents per share. So we've locked in, we have our 6 stocks there. Now we can go over to dividend.com and we can see how long have these stocks been paying out dividends. So RPM, MSM, Foot Locker here, Main Street Capital, Ford, and CVS. Now I'm going to go ahead and make that one big again here. There we are. Now, this one here, RPM, has been paying out dividends for 43 years. Not just paying out dividends, but has had dividend growth for 43 years. They also have a very healthy payout ratio, a very healthy dividend yield, and their ex-dividend date is on April 16th, which is Monday. So you do need to buy them on Friday or prior. So let's go ahead and sort these by how long they've been paying out dividends. Okay, so number one is RPM International, followed right behind by CVS Health Corporation with 10 years of consistent dividend growth, very nice payout ratio. Their ex-dividend is on April 20th, which is next Friday. So you could actually buy the stock on Thursday and hold it until the ex-dividend date, which is Friday, and sell it off. If you're able to get a capital appreciation on that sell, then you can get, you capture the dividend as well, plus you make that capital appreciation short term. So 10 years of growth, very nice healthy payout ratio. Number three is MSC Industrial Direct, 7 years of dividend growth, 45% payout ratio, 2.53% yield. So you can see here, these all look very nice. 43 definitely looks very nice compared to Foot Locker. Foot Locker, 7 years of dividend growth, 31% payout ratio, dividend yield of near 3%. They have their ex-dividend on the 19th, which is next Thursday, so you need to buy them on Wednesday or prior to be eligible for that payout on May the 4th. Be with you. Main Street Capital, 7 years of dividend growth, very high payout ratio, but this is a real estate investment trust, meaning that they do need to pay out about 90% of their earnings in order to not get taxed. You have to look up the way REITs get taxed. If you go down towards the bottom, you'll notice that this stock is not qualified dividend, meaning that the dividend that you receive from Main Street Capital will get taxed at your regular income tax bracket unless you're buying and trading within your Roth IRA. Then you don't have to claim it on your taxes because it's inside of a tax sheltered account. Whereas RPM, for example, it's a qualified dividend, meaning that if you buy and you receive dividend payments from the stock, you'll only need to pay at the much lower payout bracket. So if you are in the 12% bracket or below for 2018, then you'll pay 0% on your dividends. If you're in the 22% bracket, then you're going to have to pay, I believe, 15% tax bracket. So there's a 0% for dividends. For qualified dividends, there's a 0% tax bracket, a 15% tax bracket, and a 20% tax bracket. So yeah, Warren Buffett on his dividends, because he makes so much, because they're qualified dividends, he doesn't have to pay on his actual income tax bracket, income tax. Yeah, the whole tax thing. You guys just have to read into it. I think I made a video on it, but I'm not 100% sure. And then our last one here is Ford. Now, I put Ford at the very end because it has had no dividend growth over the last few years. This payout ratio is nice. It does have a 5.24% yield, which some would consider a very nice buying opportunity, but there are other stocks out there such as AT&T and Verizon that have dividend yields of around 5% and do have dividend growth on them. So I do own Ford. Disclaimer, I'm a shareholder of Ford. I hold it inside my Robinhood account. It's the only stock I hold inside Robinhood. I think it's a good stock overall, but yeah, not too nothing too crazy. This one, ex-dividend, is on the 19th, which is next Thursday, so you do need to buy them on Wednesday or prior to be eligible for the payout on June 1st. And they recently had a special dividend payout. So right here, they had a special dividend payout pretty recently back in January. I got that on my, so they paid 13 cents per share, and then they paid 15 cents per share on top of it. So I think that's just about all we're going to cover in this video. We're already at 25 minutes. So I want to go ahead and wrap it up there. So again, the 6 stocks to check out this week are RPM International, CVS Health Corporations, MSC Industrial Direct Co., Foot Locker, ticker symbol FL, Main Street Capital, ticker symbol MAIN, and Ford, ticker symbol F. So RPM, CVS, MSM, FL, MAIN, and F. So that wraps up our X dividends coming up next week. So it's up to you guys which one of those look like a great bargain and could potentially be great buying opportunities at this time, which will give you very nice yields, very healthy dividend payouts. And that's it. So I want to thank everyone for watching up until this point. If you did enjoy the video, remember to like, comment, and subscribe below. I fixed my headset, I believe, so I should be sounding less scratchy. I've read a couple of your guys' comments out there, my viewers and subscribers, that said I need a new headset. I do have a brand new headset, but I did have to adjust the microphone on it, I believe. So go ahead and hit the subscribe button, hit the notification button for future videos. If you have any questions, go ahead and leave them in the comment section below. If you do hold any of these stocks, let me know in the comment section. If you do think that you'll research into any of them, let me know in the comment section as well. I always like to start up a conversation. I like to talk to people. So yeah, go ahead and leave it in the comment section below or check it out over on Facebook and talk to me there. As a friendly disclaimer, I am not a financial advisor or a tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor myself, trying to help others make their money work for them and looking for some great discounts. So thank you guys for tuning in. I will see you next time. Have a great day. Bye.